Valens Research, Uniform Financial Analytics.
Lamar Advertising. For those of you who don't know, Lamar Advertising is specifically focused on advertising on billboards. Right? They are billboard advertising. They are outdoor advertising. What's really interesting about Lamar is intuitively on an as-reported basis, right? What we can see on an as-reported basis is returns ramped in 2016, but they've actually been declining since. What we can basically say is we can say, well, you know what, it makes sense. As more and more money has flowed to digital advertising, Facebook, Google, et cetera, quite frankly, people are looking at, are we really getting bang for our buck on outdoor advertisements? And so people have been reducing their advertising with Lamar, and that's why returns have rolled over. In reality, though, returns haven't rolled over the last 3 years. Returns have continued to expand. If you were looking at the as-reported metrics for Lamar, you would think that you're buying into or you're researching a declining business. You're not, though. You're actually investing in a company that has had impressive return on investment expansion because of the investments that they've made in terms of digital solutions on their boards, in terms of unique ways to target advertising, et cetera. You're seeing a high return, expanding return business, not a declining business. Those are two completely different businesses in terms of how we want to analyze them. Those are also two completely different kind of businesses when we talk to management that we want to ask questions about, right? You're going to change the conversations you have with management. You're going to change the conversations you have with sell-side analysts. You're going to change how you think about modeling this company when you realize it's an improving return on investment company, not a declining. And that's really important, especially when you look at what the market's pricing in, where the market's basically pricing in flat returns, right? And if we think that this company won't just do flat returns, that returns can continue to expand as it continues to, lead more of its billboards to be more high tech, meaning it can drive higher prices for them, et cetera. ROIs are likely to expand, not to stay flat or down. And all of a sudden, if we look at it in that perspective, we could be looking at a company that's worth significantly more than the market realizes. I can just look at this very, very quickly. Right? If I just basically take this up and say, hey, could returns get up to 12%? Right? Basically continuing the expansion that they did from 7 to 9% the last couple of years, that just continues on up. Well, if that happens, this company could be a double. Very different view on what the company's potential outcomes are if we understand what the real numbers are.
Valens Research, the world's leading source for uniform financial analytics.